Good morning, and thank you for joining me for the TerraCom Limited Investor Webinar. I'm Jane Morgan, Investor and Media Relations Manager, and today I am joined by our Managing Director, Danny McCarthy. Danny will be running through the investor presentation, which is on the ASX, followed by Q&A sessions. To ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. Danny, I'll hand over to you.
Thanks very much, Jane, and thanks everyone for joining. I'll run through the presentation and then we'll have some questions. So today I'm going to focus on an overview of the company, quarter one performance, market and capitalisation, operations, our strategy, and sustainability and outlook for the company. So for those who are new to TerraCom, company at a glance, we've got a portfolio of geographic diversification of development, producing and exploration assets in Australia and South Africa. We have 3 mines currently in production, the flagship Blair Athol mine, where I'm at today, and 2 mines in South Africa being NCC and NBC. And we also have 2 mines in care and maintenance, one being Ubuntu, one in Kangala. And we have a project that's shovel ready once we finalise negotiations with Eskom on our CSA. Now, South Africa is a stable fixed margin business which provides an annuity stream through our domestic sales, with 75% of our coal sales being sold into Eskom, and the balance we push out to the export market. We're a cash generating business, capitalising on strong demand for low impurity thermal coal. Our coal's in well demand in the world, both from Blair Athol and our export products from South Africa. And Blair Athol, as I said, underpins the business as the bedrock of the group. Our market export sales is about 45% sold mainly into Japan, Korea, and into India, with domestic sales being South Africa, making up 55% of our total sales portfolio. Got an experienced board and executive, our chairman, Mark Lochtenberg, myself, Glenn Lewis, who's been with us for some time, Mark Ludsky, David Norris, and rounding out the executive is Megan Etzel, our CFO and company secretary, all very well regarded in their relevant fields of expertise. Corporate snapshot. As of yesterday, 11th of November, we had a market cap of 176 million and a share price of 22 cents with 801 million shares on issue. Regal are our largest shareholder, closely followed by Beniathan, Thorney, Fred Bart, and Terra directors and management also hold 2.7% of stock. We've had a reasonably stable shareholder base, with the top 20 shareholders maintaining consistently about 60% of TerraCom's shares on issue. You can see there on the right, we've got 2 producing regions, one being South Africa, the other being Australia, and the ships depicting the countries they go to in India, Japan, and Korea. We don't sell coal into China at this stage. Recapping on some highlights from the year just gone, 3,600 employees and contractors, large contingent of that being made up by our South African operations. We had total sales revenue at BA of 251 million Aussie. Total ROM production for the group, 9.6 million tonnes for total sales of 7.2. BA average coal price sitting around 159, and our costs, which maintains our margins through long run pricing cycles, are staying well in control. Some performance for the quarter. If you're looking at total ROM and sales, 2.5 million ROM for the quarter, 1.8 million tonne sales. And you can see there in the graph on the right, the split of equity that we hold and the owner and the partner. So in total, we've got the 1.8 million tonnes of coal sales achieved for the quarter. Q1 highlights, BA, as I reported in the quarterly, 404,000 tonnes of sales. with 535,000 tonnes of ROM. We still remain on track for our guidance of 1.8 million tonnes by June 30 next year, and we have declared a 1 cent per ordinary fully paid share dividend, which is fully franked and will be payable in December. BA's average coal price per sold tonne for the quarter sitting at 149, which is around about what our long run forecast is for Blair Athol. Just wanted to recap on our capital management framework. So what underpins this is reliable and consistent operations and making our capital work to produce net operating cash flows. We hold a balance to maintain and optimize our operations through working and sustaining capital. And we have a resilient balance sheet. For those of you being long-term shareholders and followed the company, we paid off all of our debt 2022-23 in the order of $250 million. So we've got a very clean balance sheet. And we have a dividend policy payout ratio maintained at 60 to 90% on a quarterly cadence, depending on cash flows and prevailing production. That generates surplus cash flows. We've got three areas that we look at. We look at external growth investments for value accretive opportunities. We look at internal growth, whether we've got the ability to do more with our current assets. And then we look at additional shareholder returns in accordance with our well-publicised dividend policy. Just to give people some history on our capital allocation. So if you look back on the graph, we declared a maiden dividend of 1 cent per share in FY 2020. And people that have been around coal would remember the particularly tough and challenging times in the ensuing period. And then the coal prices went to plus $400 a tonne, which enabled us to not only clear our debt of circa 250 million Aussie, but also return significant capital to shareholders in the order of 276 million, which totals 34.5 cents per share, returned to shareholders from August 2022 up to and including the recent dividend declared. You'll see on the graph a hatch section for FY 2025. That simply depicts the possible dividend based on continued operational performance and the forecast export coal pricings being achieved. So we're confident that we're now returned to normal programming in regards to dividend flows. And of course, anything that we do with South Africa may also result in a special dividend being declared by the board if and when we're able to sell South Africa for the right price. Forecast thermal coal pricing. You can see there on the graph, the green line depicts from 2011 through to current day. And you can see the massive spike there around 2022-23, which enabled us to not only clean up our balance sheet, but also return significant capital to shareholders. And then we've got a 150 forecast price going forward, and we're achieving that through a mixture of our Newcastle index-linked pricing for about half of our production, with the other half remaining on competitive fixed price deals. Our strategy is to push more production to Japan, which favours a direct index-linked basis. Just a quick run around of our operations. Where I am at today, out at Clermont, TerraCom acquired what we call our flagship operation at Blair Athol in 2017. And through that period, we've transitioned to owner-operator in 2020, and we consistently export 1.8 million tonnes per annum of high-quality thermal coal. And we do rehabilitation on a progressive basis so that we can maximise the operational use of the rehab bond and look to make sure that we do that as part of our progressive operations. Quick run around on BA, 2.25 million ROM for 1.8 million tonnes, pushed primarily into Japan, South Korea, and India. It's 100% owned by TerraCom, and we're owner-operator. We have a dragline We have truck excavate and dozers. We have ore reserves of 20 million tonnes approved and probable, which gives us about 14 million tonnes of marketable, resulting in almost 8 years life at 1.8 million tonnes into the market. So very good long run stability for BA. If the coal prices continue as they are, and we continue to contain our costs as we've been able to in an owner-operator environment and a direct labour relationship with our employees, then we're confident that the good times will continue from Blair Athol through to the end of its natural life. The Morelands project. This has been one that we've been talking about for some time, and almost to a point where we need people to start believing that this is a project that's going to come off. If you look at the map there, you can see TerraCom's Blair Athol mine depicted in the beige, and the Morelands project in the light green, which spans all of that area. And the Morelands mining project is probably where that little cursor points to in the middle of the green area. Morelands will be initially developed as a 1.9 million tonne run-of-mine operation with 25-year mine life, with expansion potential to 4 million tonnes and beyond, subject to the grant of a mining lease and receipt of other relevant approvals. Some headline facts about Morelands. TerraCom intends to act as development and mining services partner for Windtime, the ultimate client. Blair Athol is to be used as an infrastructure processing and logistics precinct, generating long-term revenue stream alongside steady-state ROM production from BA through to its end of mine life. And we will work exclusively and are working exclusively with Windtime to agree definitive project documents by the end of this calendar year. Beyond that, and once we get Morelands well on track and in place, we will look to investigate other global development and operation opportunities in complementary markets and industries, including resources, renewable resources, and related areas. A bit more detail on Morelands. You can see there how close Morelands really is. It's about 10 to 15k as the crow flies, and there's a grey area in between us and Morelands, which is owned by another miner. Blair Athol is depicted there, which will, under stage one of the development of Morelands, do all of the processing, logistics management, and railing out to port, with Morelands being developed as a satellite operation. And you can see the two orange bars there, the bottom orange bar depicting the current Blair Athol processing precinct, with stage one of Morelands being done on a very low capital, minimum site works scenario, with coal being taken first by road on public roads through into Blair Athol and then out through our existing logistics chain out to market. Of course, that's all subject to approvals and so on, but that's how the stage one of Morelands will be developed in the initial term to get coal to market. So on the timeline, you can see on the top left, we announced a cooperation agreement in August 2024 to jointly develop and operate the Morelands Thermal Coal Project. Commercial documents are well advanced, and we have a milestone of definitive project documents being agreed by December this year, which will be a great Christmas present. December next year, being 12 months from once we get the documents agreed, for design, approvals and planning to continue, with site works and first coal expected in June of 2026, stage one, then a ramp up to 1.9 million tonne per annum, which is the current licence conditions for Morelands. So there's some more flavour about Morelands that we previously haven't given to the market. Our strategy and immediate focus for management is to maximise the value of our flagship operation here at Blair Athol and make sure that we squeeze every tonne of coal out that we can, which gives us the remaining 8 years. And we're also looking at highwall mining and other auger mining opportunities to take remnant coal from final high walls that otherwise wouldn't be taking. So we've got a project underway looking at that at the moment, which may add a few 100,000 tonnes to BA's ultimate resources. To realise value, we're continuing to look at divestment of our South African operations on the basis we achieve appropriate economic returns. Anyone can sell South Africa in the current climate. Selling it for the right price and the right conditions is something that we're working hard on. And as I mentioned before, there's a potential for a special dividend once the sale concludes. Up and until the sale is a reality, we are continuing to focus heavily on South Africa and seeing some encouraging signs of it returning to some normality around operations and the export market. To create value for BA long-term in the community, we've got Blair Athol as the processing precinct, leveraging off well-established water, power, and other infrastructure so that we can exploit the coal development requirements of Morelands for 25 to 30 years for both organisations, the community and the region. We're also actively looking at other opportunities in coal or bulk commodities, as we've said before. Our mantra is simple: be better than our peers, be reliable, be consistent, and be cost conscious every day. Jane, that's probably the substance of the presentation. If you wanted to open up some questions.
Absolutely. I might actually just get you to stop sharing your screen there. And I did mention earlier in the presentation that this presentation has been launched with the ASX. But let's jump into some questions now. All right. So first one, and we did touch on this, but how is production at Blair Athol? I mean, the wet season is upon us. Is the mine in good shape to deal with the rain?
Yeah, well, as I mentioned before, I'm at the mine today and I'm here for the balance of the week, so I'll have a good visit. Every mine this year or this time of the year has a well-advanced wet weather preparation regime, and we're no different. We have an overarching water management master plan, which looks at all of our pumping, pipes, dam levels, discharge, which we aren't able to. And so we are expert at moving water around the mine. The mine is in good shape, production's on track, and we're well on our way to being leading at half time, as we've said prior, with 900,000 tonnes plus minus over a ship's rail by the time Santa comes down the chimney.
Well, just further on that, actually, so the next one kind of leads into it. How is the current rail train schedule looking?
Yeah, it's fairly robust. There's reasonable ship queue, so ships are clearing at Delhi Bay reasonably well. Our rail provider are doing well, they're performing well. There's a new regime in place for tighter planning and controls through networks, so all producers are seeing the benefit of the agility that's been shown by the network providers and also the rail providers.
Wonderful. Sorry, I'm jumping around a little bit here. There's quite a few coming through.
Yeah.
So what's the latest update from South Africa in regards to coal sales? So the Ilof project and the asset sales process.
Okay, let me tick them off one by one. So South Africa, as I've continued to say for some time, both written and verbal to anyone that cares to listen to me, is a challenging environment to operate in. There's two distinct parts of South Africa for our business. First part, and what underpins our ability to actually operate there, are our domestic sales to Eskom, and they are robust. They continue to be robust, and we have a good cadence, and we're delivering contract, and sometimes we're delivering in excess of contract. So that's part one of that question. Part two of that question is logistics. The way to make money in South Africa is to get as much export coal as you can onto the seaborne market. And I'm encouraged by the performance I've seen throughout October. I won't get too excited yet. However, I am very encouraged by the return to some normality around us getting trains, which frees up a whole heap of production constraints that are placed on us otherwise. And so I remain very optimistic about the short-term future of our production capability to get coal to export. Second part of your question was around ELOF, and as I mentioned before, ELOF remains shovel-ready, which means it's ready to go. We have a Eskom contract, and we are continuing to negotiate with Eskom around some final pricing detail to make sure that once we get up and running, that we are well positioned from a financial return to make sure that Eskom is a winner for us all. Part 3 of your question was the sale process. It's interesting, the dynamic changing at the moment with the export will work in our favour. And so that will place different pressures on people that otherwise would have an interest in some sort of file sale out of South Africa. So for us, there's 2 options. We divest at the right price, or we roll up our sleeves like we have. We play an active interest in the operations over there, and we maximise the returns through normal course of operations, Jane.
Thank you, Danny. I should have broken that down actually for you. But well
I've got
done.
a good memory.
Yeah. Okay, I am jumping around again here now. So the historic tax debt is something that the company has focused on reducing. What is the balance projected to be at the end of December 2024?
Yeah, it's been a priority for us, and we've made no secret of that. The business, as we see it at the moment on forecast production levels, forecast pricing, and cash flows, we'll see that paid to nil by the end of this half year. So by the time December rolls around and our reports go out, that tax debt will be fully extinguished, and we'll be on track.
Thank you, Danny.
Just to say on that, we've continued with income tax instalments throughout the period. So we haven't stopped, and we've continued. And as I said, all things being equal, it should be extinguished by the end of December.
Wonderful. Okay, next one. So in August 2024, the company announced the cooperation agreement with Windtime Energy Group to jointly develop and operate the Morelands project. I know you did touch on this in your presentation, but this attendee might have missed it. So can you provide shareholders with a little bit of an update on that progress?
Yeah, I can. So there's 2 steering committee meetings established per week. One is operationally focused, and that looks at everything from approvals to upgrades to projects to scopes of works. And we've got people actively engaged, different companies on helping us with that: mine planning, mine infrastructure, mine development. So we're well advanced on that. The other steering committee meeting is focused on the project documentation, so getting the definitive commercial documents done. And we are focused on that. We meet, as I say, twice per week. And should anything change by the time we get to December, if we are not going to achieve our milestone, we'll of course inform the market. But as I see it right now, we're well on track to do what we said we're going to do, Jane, by the end of December.
Thank you, Danny. Sorry, lots coming through. So you quoted the BA coal sell price of 145.5 per tonne. This webinar attendee said, I get the daily resources fact sheet from Bell Potter showing the Newcastle futures contract price, excuse me, for 29th November at US $142 per tonne. So why the big difference between the prices? Yeah,
so it's important to understand that the headline nuke price is based on a 6,000 kcal product. And so BA is benchmarked off that, but we sell a 5,500 kcal product. So whatever number you see, headline number, you've got to take 7.5% off that already. And then because we're actually not a straight Newcastle product, there's other discounts at play. So we may have an overall discount to the nuke published index on our nuke link prices of up to 17 to 18%. And then when you're in the more competitive market around spot pricing, fixed pricing, you get further discounts to nuke. So whilst we're not strictly a nuke coal, we're benchmarked against that, which puts us into a good bracket. However, we've seen a shift away from that more towards other indices around Richards Bay and so on. So all things being told, 150 Aussie, there or thereabouts for our coal, is about what we can expect when the nuke is doing what it's currently doing.
Thanks, Danny. So another one's come through. So are there any plans to move into met coal similar to WHC, or will thermal coal be the main focus for the company?
We love coal. And so it's thermal coal or met coal or any bulk commodity that makes sense to us. We can handle bulk commodities very easily. We don't have to transform our business into becoming a processing hub in terms of critical minerals right now. So for us to look at the right opportunity, and we have had a tilt at least one over the last 18 months. So absolutely, met coal. If anyone's got any project ideas that they want to talk to us about, then we're open to it. But certainly all coal for us is fine, Joan.
Wonderful. I'm just mindful of time. So final one, what does the go forward dividend position look like for TerraCom?
Well, if I had $1 for every time I'd been asked that, I'd be able to pay a dividend every week. And so for us, we know we've had a pause in the dividend flow, and we're happy to say that we're returning to that now. And if I look at the simple maths for BA, set aside South Africa. So BA at 1.8 million tonnes with a coal price of 150 Aussie and a coal cost into a boat of 110. We're looking in the order of $40 a tonne. EBITDA, you give a bit to the tax man, you keep a bit for working capital, and dividends in the order of 3 cents aren't out of reality in terms of what we've got. And of course, if there's circumstances where coal prices go up and we have our dividend payout ratio of 60 to 90%, well, of course, shareholders share in that. And of course, if things go down beyond our control, then we'll also be beholden to that as well. Special dividends, as I said, could be available if we sell South Africa at the right price. And if South Africa is recovering, as I am encouraged, then we also may see some special flows out of South Africa that aren't factored in any of our cash flows or dividend payments.
Thank you, Danny. Sorry, this one's actually come through a few times, so I just want to touch on it. Is there any plans to develop the mines currently under care and maintenance?
The two mines in South Africa are under care and maintenance. So Ubuntu is at the end of its CSA contract, and so there's two options for Ubuntu. One is to completely close it, do the rehabilitation. The other one is to sell it to nearby coal lease owners, and that's something that we're considering at the moment. So there's no plans to do anything with that at the moment. With Kengala is the natural processing hub for ELOF. And so we've got two options for Kengala. One is to start it up and start toll washing and generating some income through third-party coal. The other is to wait until we have the ELOF project green-lighted, and we'll put all of the coal through Kengala, and so it will be out of care and maintenance.
Wonderful. Well, thank you, Danny. That's all we actually have time for today. And to our attendees, should we have missed any of your questions, please feel free to be in touch via the contact details, which are at the bottom of our ASX announcements. And a copy of today's recording will be available online in the coming days as well. But I want to thank you all for joining us. And Danny, thanks for joining me as well.
Thanks, Jane. Thanks, everyone, for joining us. And I'm sure there'll be other questions that people want to fire at me sometime.
Wonderful. Thanks again.